From the beginning of the pandemic in March 2020 to February 2021, Cathie Wood's flagship investment fund, the Arkk Innovation ETF, soared 313%. The S&P 500 in the same time frame produced a return of just 70%. A fund focused on companies producing disruptive innovation, aka new technology that changes the way the world works. The Arkk Innovation ETF was all the hype during the pandemic. Investors were pouring billions upon billions of dollars into this new fund that was producing staggering returns, and the fund peaked at a share price of over $156. However, as time went on, Cathie Wood made some controversial investment decisions that ultimately have led the Arkk Innovation ETF to fall below pre-pandemic share prices. Not only that, but in the process, Wood was granted the unappealing title of one of the largest wealth destroyers of the past decade, losing an estimated $14 billion in client capital across all of her actively managed funds. Wood managed to do this in a time when the market was generally pretty bullish, especially in recent years following the subsiding of the pandemic. Despite the recent poor performance, Wood maintains her investing theme of disruptive innovation as being superior, and frequently claims price targets for her holdings that draw major headlines.
Our bull case is $1.5 million by 2030.
Our expected value is roughly $2,000, and that's...
Because of these price targets, as well as Wood's unique style of investing, people have often criticized Wood as being a gambler as opposed to an actual investor. But before we go over some of Wood's most questionable and embarrassing investment decisions, and how she became one of the largest wealth destroyers in recent history, we need to first understand her unique approach to investing, and how she even got money from people to invest in the first place. Wood got her start working for various Wall Street firms until she ended up joining an asset management firm in 2001 called AllianceBernstein, where she managed over $5 billion. However, her time with this firm was rocky, specifically during the financial crisis in 2008 when Wood was criticized for her performance. In what would become a theme for her investing strategies, Wood was too risky during this time period, as she was always looking for the upcoming, undervalued revolutionary tech company to go all in on. Wood characterizes this investing theme as disruptive innovation, which her flagship fund today defines as the introduction of a technologically enabled new product or service that potentially changes the way the world works. At the time of the financial crisis in 2008, this was not exactly a popular strategy amongst top-level executives at AllianceBernstein. Her boss at the time told Wood that her biggest blind spot is managing risk and volatility. Wood eventually left the firm after her ideas for actively managed funds revolving around companies participating in disruptive innovation were deemed far too risky. Wood founded Ark Invest immediately after leaving AllianceBernstein and received her initial seed capital for Ark's first 4 rounds from Bill Huang, the owner of another asset management firm at the time. According to Wood, the two had spoken about investing strategies in 2013, and Huang believed in her vision and eventually agreed to provide an undisclosed amount to Wood to jumpstart Ark Invest. And, well, the rest is history. Wood came up with 5 major innovation platforms that she believed would shape the future, and these platforms would become the core of Ark Invest's investing philosophies. These 5 innovation platforms were robotics, automation, big data, artificial intelligence, and genomics, which is a field of biology that relates to all things DNA and genetics. Wood believed that companies in these industries would eventually become the biggest and most successful companies in the world. Ark Invest's main fund is the Arkk Innovation Fund, which we have already established as revolving around the theme of
disruptive innovation.
The fund specifically focuses on companies producing products related to platforms from Wood's 5 major innovation platforms, such as artificial intelligence, autonomous cars, next-gen cloud computing, and digital assets. Other significant Ark Invest funds are the Arkk Autonomous Tech and Robotics Fund, the Arkk Genomic Revolution Fund, and the Arkk Bitcoin ETF. Due to the Fed-driven bull market that we found ourselves in the middle of the pandemic, Arkk began producing insane returns. For the year 2020, the Arkk Innovation Fund returned 157%, compared to the S&P 500's return of just 18%. This was thanks to the Ark Innovation Fund's largest holdings at the time that Wood was all in on, such as Zoom, which returned as much as 491% in 2020, and Tesla, which rose over 600%. Wood appeared as a genius investor at this time, and as a result, investors poured nearly $30 billion into the Ark Innovation Fund that year. And Wood even received recognition from big names such as Jim Cramer, who tweeted that Wood was a genius. And in what would become an extremely ironic moment, Ark Invest even released ads that made fun of people seeking safety and comfort in investing.
Because hey, that's historically been the case, and things never change. Side effects may include, but are not limited to, owning companies associated with the traditional world order. Investors holding stocks associated with traditional transportation, banking, bricks and mortar retail, and linear TV may experience headache, nausea, and increased blood pressure due to the accelerating threat of disruptive innovation. Your investment portfolio doesn't need to be bothered by a changing world. This parody was brought to you by Ark Invest. To learn more, download.
Unfortunately for Wood and Ark Invest, their success was short-lived. As the market began to cool off and tech stocks returned to normal prices, Wood's tech-heavy Arkk Innovation Fund began to plummet. Early on in 2021, the fund's share price began to decline, and from the end of 2021 to the first few months of 2022, the fund lost over 50% of its value. Wood's biggest holdings, companies like Tesla, Zoom, Roku, and Robinhood, were getting absolutely hammered. All of the major headway that the Ark Innovation Fund had made during the pandemic was wiped out just like that. Out of the Ark Innovation Fund's top 10 holdings as of 2024, all but one of the stocks are down big time since the fund's peak during the pandemic in 2021. Tesla, by far the fund's biggest holding, taking up over 14% of the entire fund, is down 45% from its peak in 2021. Roku, the fund's second biggest holding, which makes up just under 10% of the fund, is down a whopping 86% since its 2021 peak. Roblox is down 60%, Coinbase is down 25%, Square is down 72%, and so on and so on. Woods' tech-focused disruptive innovation-themed style of investing has seemingly backfired, as the stock market has cooled off from its 2020 to 2021 rage. And as a result, the Ark Innovation Fund is down 66% from its all-time high. As it turns out, this theme of losing substantial capital is common for Wood and Ark Invest. In a study conducted by Morningstar, Ark Invest was found to have destroyed over $14 billion of wealth over the past decade. The Ark Innovation Fund specifically was responsible for over $7.1 billion in lost money, and the Ark Genomic Revolution ETF was responsible for burning over $4.2 billion. The rest of Ark's funds were responsible for a combined $2.7 billion in destroyed wealth. And of all the companies that Morningstar surveyed, Ark Invest overall lost the most amount of money, and it wasn't even close. The fund that lost the second most amount of money didn't even lose half the amount that Ark Invest lost. But the unique thing about Cathie Wood is that despite her funds having lost significant value and her largest holdings being super far into the red, she continues to invest into the same companies, as she is convinced that any drops in these companies is only temporary. This strategy, which is referred to on Wall Street as trying to catch a falling knife, is very risky and is usually not viewed as a great idea. After all, a stock will not typically continue to fall if the stock's forecast is positive. For example, Wood deployed this strategy in May 2022 as Coinbase's stock fell over 20% in a single day. As the stock continued to drop more and more throughout the day, Wood continued to buy and buy. It is for reasons such as this that people have criticized Wood as being a gambler as opposed to an actual investor, and people like Jim Cramer, who once praised her, have now changed their opinion.
I think that Cathie Wood is the kiss of death. When I see her buying things, I am shocked at what she buys and how she buys. She buys like someone who just started yesterday.
But maybe losing $14 billion is all a part of Woods' plan? In a since-deleted tweet from July 2024, Wood said that her fund's trading-related capital tax losses should offset trading-related capital tax gains for years, an underappreciated asset associated with our strategies. More simply put, Wood is fine with losing billions of dollars now because that means she won't have to pay a fraction of that amount of money in taxes down the road. Okay, obviously Wood isn't losing money on purpose just to offset capital gains taxes, But this tweet from Wood is just another head-scratcher and an embarrassing statement from someone who actively manages billions and billions of dollars of client capital. And like I mentioned earlier in the video, there are some other embarrassing moves that Wood has made regarding questionable investment decisions. In addition to her price targets for Tesla,
Our expected value is roughly $2,000, and that's within a range of $1,400 to $2,500, our bear and bull case.
and Bitcoin,
Our bull case is $1.5 million by 2030.
which I should say, I'm not calling embarrassing per se, but rather just extremely bold. Wood has also had some unfortunate timing when it comes to investing in companies she strongly believes in. Wood sold 1.3 million shares of Nvidia in the fourth quarter of 2022, which was quite literally right before the release of ChatGPT, which sparked a massive AI-fueled stock market rally led by Nvidia. Taking a look at Nvidia's chart, Wood sold Ark Invest shares of Nvidia right here, the actual bottom. And since selling, the stock has risen over 700%, and Ark Invest missed out on over $1.2 billion of returns as a result. Then there are Wood's decisions to invest heavily into both Robinhood and Coinbase on and shortly after their IPO days. Wood bought over $350 million worth of Coinbase shares over the company's first 2 trading days, and roughly $50 million worth of Robinhood shares on the company's IPO day. Both companies' share prices fell sharply shortly after their IPOs, representing massive losses for Wood and Ark Invest. These embarrassing investment decisions and bold claims, paired with her fund's poor performance and billions of dollars of capital burned, have caused the general public to develop a distrust of Wood and Ark Invest, and, in some cases, have caused some people to think of Ark Invest as a joke and not a serious investment fund. Will Ark Invest and Cathie Wood's disruptive innovation investing strategy pan out? Only time will tell.